All right, good morning, everybody. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. How's everybody doing on this fantastic Wednesday morning? We are waiting for the CPI print, as the markets haven't done anything since the last CPI print. And the last CPI print, we dropped a full percent, which is, for some reason, should have been like extremely bullish for the marketplace, but it was not. The dollar has essentially traded sideways in a range since that last CPI print. Let me pull that up over here real quick. I will show you. So basically, it's this candle right here. That's your last CPI print. Yeah, so it was bearish for the dollar, and it should have been bearish for the dollar, and it was for 2 days. So you've been trading in a range ever since. You can see that you currently are trading under monthly support, so it does look more like a breakdown is coming. And if we did get a breakdown, that would be phenomenal, as the next area of potential support would be, well, the $100 area would obviously be the big figure. So you'd probably get a little stutter step there, but 99.99 looks like the next area of potential resistance. So we definitely want to see this drop. We want to see weaker dollars, so that way we can get the markets, risk markets, and Bitcoin trading higher. However, Bitcoin's been kind of trading on its own merit, has not been trading with risk for the last week. So I shall show you this. Basically, the NASDAQ and Bitcoin have been trading pretty much side by side through this entire rally since the beginning of the 2023 Open. But as you can see here, for the last 4 days on the US 100, you have 3 green days, 1 red. And then on Bitcoin, you will see that you have the last 4 days, you have a lot of down candles, with just today only being up. But we're not counting today's candle yet, because today hasn't closed yet. Something to take of note, you have already liquidated yesterday's high. So if Bitcoin's going to go lower, I'd say probably you get a fresh daily high and then it goes. If we get a tick under 5%, which is expected on the core, year over year, it's expected to be 5%. If we get 4 point anything, that should be bullish for Bitcoin as well as the risk markets. And then on your core CPI month over month, anything under 0.4. So 0.3, 0.2, something like that. Now, I have heard people say that, the core has been mumbled and jumbled and all over the place and has not really been consistent. But if you look out longer term to where you currently are, if I could put a trend line on this chart, it would work. You do have a descending trend line for this chart. So it is going lower over time, which is all we said at the beginning when we were at the highs of 9.1%. If CPI continues to trend lower, then that ultimately should be bullish for the marketplace. People are still waiting for a recession, and I'm not saying that a recession isn't coming, but what I am saying is everybody that's waiting for the recession is probably been trying to short the market on this entire rally, whereas you probably should have just gotten long. And if you didn't get long at the bottom of the marketplace, you should have gotten long around the yearly open, because inflation has been trending lower. And that's literally what caused the market to go down, was high inflation. All right, now we have had some banking turmoils that has shown us that there is a little bit more risk in the market, with your, rental properties and your commercial real estate. All that stuff obviously is, and then you got liquidity and all this other things that people are using to call for a recession, but unfortunately, I mean, the market has been going up, not down. It's been going up. Now, it has been struggling. Obviously, it's trading in a range. This is the yearly open. So you have a yearly high and you have a yearly low, and you're trading at the yearly high. You have been consolidating at the yearly high for quite a while. Since the last CPI print on the S&P 500, you can see that literally all it has done has been liquidating people. Let me go over here real quick. Just bear with me one moment as I find it. April the 12th. And then right there is April 12th. So literally, there's the wick high on April 12th. After you liquidated that high, you immediately went down and liquidated these lows. Then you immediately went up and liquidated that high. Then you immediately came down and liquidated that low. So you've been trading literally sideways since the last CPI print, liquidating both shorts and longs. Now, think about that for 1 second. Literally, that's all you've been doing. And now you're kind of trading somewhere in the middle, but with, the highs being closer. So it does look like the market is kind of leaning towards a potential lower print, but the expected move is 5%. So anything higher than 5% should be taken bearishly by the risk market. So we'll see what we get. And I must say this also, excuse me, you have the news and then the reaction to the news. So just because the dollar should do this or because the dollar should do that based on whatever number you get, it does not always mean that that's what happens. Sometimes we get bullish numbers for the dollar and the dollar sells off, and vice versa. Sometimes we get bearish numbers for the dollar and the dollar goes higher. The markets are not 100% correlated to the dollar also, I might add. So really and truly, we have a marketplace that is being very difficult for most investors and most traders to perform in. However, we've been doing just fine over here. I currently am sitting in 2 short positions, one on Bitcoin, one on Ethereum, but I do have free capital for a bullish position if we do indeed make a fresh low of day and we reverse. All right, so we'll see what happens on today. You can see the last 2 days you've been trading basically sideways. This candle here, Monday's candle, was the candle that broke down from the near-term uptrend. There was a near-term uptrend here, or if you will say, kind of like a near-term wedge formation right here. So you did break down out of that, but there is a longer-term trend line if you come from here and do something like that you're currently posting above. So we shall see what happens. I think a liquidation of this swing low would be healthy for the market, but I would definitely want to see an instant rejection if that was to occur. Obviously, that's a big move down, so I wouldn't be looking to buy that first push lower if it did do that, because that would be quite a bit of momentum to the downside, and we never try to step in front of a runaway train. All right, so we got 6 minutes until we get the actual news. Let me see if make sure everything's going good. Yeah, it looks like everything's good on my end. Let me find you guys. What's up, my Fute Ledges? How is the Fute Ledges doing today? It's a beautiful day. It's a beautiful day. We've got 2 profitable trades that happened. Yesterday, I posted a chart on Pepe. People have gotten, I think, a little bit confused. I think they think that I'm talking about looking for an opportunity on the asset. No, that's not what I was doing at all. Simply posting the chart was to let you guys know that if you do intend to trade this thing, make sure you use a very small position size because in 3 simple days, you literally fell 55%. If you go down to the lows of that bearish candle, 65%. That's, of course, after a move up of 3,000% or 2,000%. So lots of volatility. And since it's like, I don't know, 1/1,000,000th of a penny, obviously $100 would make you own several million of those things. So you can see big price swings on your P&L with very small amount of money. So be very careful. Do not go in big and do not go in levered up on this, because it chopping around sideways will literally just eat you apart. All right, it is very volatile. Wait for daily support to be formed, wait for daily support to be shown to be support. Then you look to buy a retest. If you want to get long, if you think Pepe is the new whatever coin, right? People love to basically prop these things up and trade them. There is money to be made if you get in early, obviously. But most of the time, retail doesn't get in early. Most of the time, retail FOMO's in at the top, and then they get wrecked. And then they like to complain about market makers or whatever, rug pullers. No, you should have common sense to know that if an asset is up over 1,000%, you do not want to buy that asset, as it is already moved 1,000%. And you're supposed to look to buy value. All right, so value means lower prices. You buy low, you sell high. Anyways, that's why I posted the chart. I just want people that follow me to understand that this is very volatile. Please be careful if you are trading it. Now, there is money to make in it still because it is volatile. But you guys know that you wait, right? You're not taking entries outside of the operating areas. And if you can't find the operating area, go to a higher time frame chart. That'll show you the areas where you are looking to be long or looking to be sellers. That is the current operating range. You do have a support right there as well. So you could potentially look to take a long there, but just be very careful and do not take it on the first attempt, please, because you're likely going to get a wick through. Or if it continues its near-term trend, it's going to just blast down through it, completely through there. More than likely, you're going to see a retest of, I don't even know that number, 12,629,923. But that's with 5 zeros in front of it. Very, very much a shit coin. All right? So be careful. That's all I'm saying. Last time the CPI print, or last time the year-over-year CPI number was under 5%, was May the 12th. And as you can see, there is May the 12th's open, and there is May the 12th's close. That was the last time CPI was under 5%. All right? You can see how the market is literally trading at that price or within that candle's range, which I find to be amazing, right? It's the last time we were at that CPI print, and the market just is trading literally inside of that range. So the market's doing a pretty good job of pricing in this inflation. And like I said, lower inflation should mean higher prices. We know with COT data that there is a massive short position built into the SPX. So if we were able to get a bullish pop of any merit at all, you could see a short squeeze like insane. All right, so let's push this to the 5-minute. Let's drop this to the 5-minute. As far as entries go, like I said, if you're looking for short positions, fresh daily high, but you would want to see it reject, that would be where you would take your short position. For long positions, I don't think I would want to see even a tick under that price. Oh, immediately we're going to get a fresh daily high. Let's see if we get continuation or rejection. Let me see what is the numbers. 4.9. So this should be bullish, guys. Did we get under 4? No, we got unchanged there. So this should be bullish. And there she goes. I would not be looking to short this. You did not get a lower push to get long. Essentially, you just needed to be looking to be a buyer at weekly support, which you've been able to do so all week because it's literally been trading at that price for a long time. This is very good news. This means the Fed, what they are doing is working. So if you were with me yesterday when I had the live stream, essentially I basically said that there's context between what should and should not happen. For instance, if everybody's looking for the Fed to pause or for the Fed to stop hiking rates or even cut, well, there's a context that needs to be in place for that to happen. So if the context is inflation is trending lower, so we're going to pause, that would be bullish for risk. If the context is we're going to pause because the banks are failing, that would be bearish. All right. So you need to look at the pause with context. And as of right now, even though it is just a 0.1% lower, it's still under 5%. That means we are getting closer and closer each month to the Fed's ultimate 2% target. That should be bullish, should be treated bullish. And we shall see if the market continues that up. I was not able to get a long position, but what I am going to do right now is close the Bitcoin short. Let me see here. Something is going on. There we go. All right. So DXY, are we going to see a breakdown on the DXY? It doesn't seem to be moving a whole lot. There we go. That looks good. That should make it red on the day. There it is. Lovely, lovely, lovely. So it's still a very small move. So could there be potential to look to be a buyer? Let me pull up my longer charts here and see what this level is that I'm looking at. So that level that we were looking at yesterday for the short could be an area to look for longs. That on the Bitget platform would be 27,793. Here on this. Now remember, you don't want to take the first initial entry. But if you do get a pullback down to 27,821 on Coinbase's data feed, as long as you're not closing hourlies under that price, or as long as you're staying close to that price, you could look for potential long entries. That's later on into today or potentially later on into the week. Doesn't have to be today, but it should go a long ways. And especially, like I said, if we get tech blowing out, it's trading up to resistance right now and stalling. So we definitely want to see it get higher than resistance. All right. Here, let me show you just how far away this thing is. You do got a swing high there. So that's probably where most of your larger position traders would have their stops. They don't get, they don't get really stopped out on small intraday moves as they are trading with massive amounts of money, low risk, large, wide stops. They're merely looking for a small percentage return. But so far, so good on the reaction. It's just this smaller. I think the thing is the fact that it's just 0.1% lower. It's causing the market to struggle just a bit. But you're coming into resistance as well. You can see how that wick just traded right up there. Bing. Because people will take short positions there. So it might take a minute to break out above that. Bitcoin's still looking decent. I mean, Bitcoin's trading in this very ugly range, and it's, everybody wants it to go higher. Of course, the short traders want it to go lower, but we've been in the camp that this asset is bullish. So you need to look for bullish positions. But in the near term, you can short it, right? Because you are below the daily 21. But that's merely for a day trade. So let's see if we get that pullback during the live stream session. Once again, for those of you that have used the referral code and the link in the description for the Bitget platform, that price that I will be watching closely is 27793. 27793. As that's where I entered the short position yesterday, was a profitable trade. And then last night during the Asian session, we traded up above 27793 to stomp out anybody who had basically shorted where I shorted, and then you fell back down. So that is a good place to look for potential support. But who knows if we get it or not. But let's see the dollar go. We want to see this thing break down, as this current structure is kind of more of what you would call a bullish structure if you are a pattern trader, because this is a descending wedge or wedge like. I don't know if you could call it a wedge or not. I guess you could. Yeah, you can call it a descending wedge. Typically, people are looking for bullish entries off of such patterns. So there might be a lot of buy orders setting under 101.006 too. So a liquidation of that wick, I would want to see downside continuation. I do not want to see a rejection. Otherwise, it'll look more and more like people were buying the dollar expecting the breakout of the pattern. But you are bearish. You're bearish on the year. This signifies the yearly opening range. For any new people here that are just joining us for the first time, the yellow lines on my chart are your yearly opens. So if price is trading under it, typically we look for bearish entries. If price is trading above it, typically we look for bullish entries. But we do take the near-term trend into account because we are more day traders than anything else, or I am. But you can use the strategy for long-term position trading and everything else. You will be looking at a higher time frame chart, like the weekly or the monthlies. Let me see here. Good morning, good morning. Buenos dias, says Potatoes. What's happening, Potatoes? What's up, says Ed. What's up, my friend? Good day, good day. Hello, hello. Quick look at the Widowmaker UNG if you can. Yeah, sure. Yeah, yeah, yeah. It is bad, right? This is a natural natty gas ETF. Or actually, this is the United States Natural Gas Fund, but similar to an ETF. Yeah, it's bad, man. I mean, you would think that demand would step up at these prices, considering that not too long ago it was $34, right? You would think that demand would start stepping up, but since demand is not stepping up, that means something. There is something going on here that's causing investors to not want to get involved. But it's not just natural gas. Oil's taking a dump too. And, supply is being controlled. So we should have seen higher prices. Energy, the whole sector itself is low, on the lows. We can go check out the energy sector itself. We want sectors. Here we go. XLE. This is your energy sector once again. Oh, I don't have the yearly opening range on this chart, but it's okay. We can find it briefly. All right, so there's your yearly opening range on that. So you can basically see you set a fresh yearly high, then you traded under it, checked it as resistance, traded back up to it. So far, been rejected. So yeah, the energy sector as a whole is literally lower. If we did get the energy sector and a couple other sectors to start being more bullish, for instance, the banking sector, that would absolutely cause the S&P 500 to break out. Tech is the sector that has been leading the rally. You're getting a pullback, but this is pre-market. You can see yesterday you got your pullback. The last 2 days have literally been nowhere, been trading sideways. Here you are today, pre-market, trading at 150.95. Be very careful about getting long XLK because you could just simply be looking for a liquidation. And then you could roll over for a pullback to the daily 21. You don't want to buy highs. Bitcoin, on the other hand, is not at the highs. And since you have the US 100 here, NASDAQ breaking out, as long as it continues to be bullish, I will be looking for long positions on Bitcoin from now on, at least until the next monthly CPI print, right? But you will have pullback days and potentially even a pullback week during that. So please don't think that I'm looking for longs every single day. That's not what I mean. I mean, I will wait for a position to set up first. Then I would look to take the entry. For instance, this would have been a beautiful entry. As you can see, you closed the daily under it. That was a bear trap. Also closing under support, but there was no way to gain entry unless you literally bought the low of day, which would have been hard to do. Considering, yeah, there is absolutely a level that would have been able to allow you to buy that low right there. Right there's an old daily support. So you could have gotten long right at that price. Once price evacuated back above 147.11, you could have got long through your stop under the daily low. Had you done that, you'd be sitting pretty right now since the market is trading higher. That's basically what you got to do. You just got to change the way you look at things. Stop buying highs, look to buy lows. Look for value. Look for value. When value is present, if you have difficulty establishing a long-term trend, or you can simply click to the weekly chart and put your 21 exponential moving average on. That will show you the trend, the longer term trend, right? You can clearly see it here. The longer term trend is up, and price is still trading fairly a far distance away from it. So we haven't really seen, since the yearly open, we really haven't seen any reason to be afraid of Bitcoin. It's just the FUD that's been going on that's frightening people. And Gary Gensler, the SEC chairperson, trying to get rid of all the exchanges. Bitcoin is pushing higher, so not going to pull back anytime soon. We are very early in the morning. The market open isn't until 9:30. It is currently 8:46. So, obviously a lot of this can get faded at the market open, but like I said, we will be looking and watching support. Once again, if you're just showing up that day, that support that we will be looking for is on the Coinbase exchange, 27821. On the Bitget exchange, that price is 27793, and that's not the Bitget exchange on this platform. That's on Bitget's platform, because it isn't priced the same. You're looking at the spot price, whereas we are trading the futures. We are trading the futures. By trading the futures, it allows you to basically hedge your spot position, right? Your hodl bag, if you will. But it's easy to find. It's just your last down move, the bullish candle close before you had the breakout. That's the area that we're looking for. That's the last area of resistance. You can see that it was support there. It was resistance there. This is back above it, so we look for it to trade back down, tag it, and go back to the upside. But we must see it find support there. We can't just buy it on an immediate retest. Sticky core. Yeah. It is sticky, Michelle. It did not change. But like I said earlier in the video, if I was able to put a trend line on this, it is trending lower. But yes, the last few months, it has been very sticky. Very sticky. I mean, there's January, right? January, September. I mean, September. Jesus. January, February, March, April. And then now we'll have a new one on the May. And it is 0.4. So it'll be the same. But it is trending lower long term. But for the near term, for this year, it is very sticky. The core is. But when the Fed's talking about inflation, the 2% target isn't core. They want the other one. They want the year over year down to 2%, because that is that's inflation. We'll pull it up right here. Here it is. Inflation rate year over year. Can't do it on log. And their target is 2%. Right there is their target. So yeah, it's lower. That's good news. This is where they're trying to get to 2%. This is the inflation rate year over year. This is basically the number they want moving lower. Obviously, they want core to move lower too, right? Obviously. So yeah, as long as core stays at or around 4%, people are going to be screaming sticky inflation and they're going to be screaming recession. People started saying that a recession at the beginning of this year is, second quarter. We're in the second quarter, right? We're already in the second quarter. We haven't seen a recession yet. In my opinion, again, this is just my opinion, as long as inflation is moving lower, prices should remain higher. Now, that doesn't necessarily mean Bitcoin. When I say prices should go higher, I'm talking about risk in general. Bitcoin is trading on its own merit right now. It was trading with tech, but it has separated from tech. What really has everybody concerned is obviously the 1 month government bond yield. You can see right now it's at 5.5%. That's the 1 month. The 2 year is setting at 3.9. So we want to see this go down. We definitely want to see the 1 month go down. We want to see the yield curve get uninverted. Basically, as long as the yield curve is inverted, people are going to scream recession because the yield curve has called a recession almost 100% of the time, right? So that's basically what's got everybody concerned. And, they say it could be still Q4 or even in the next year, we could see a recession. Nobody knows what's going to happen in the future. We can only trade the chart that we have in front of us. So I suggest you do that. The 1 month is the Fed funds rate. That's literally the Fed fund rate. If you put the Fed fund rate up against this chart, you will simply see that it is it's pretty much right in line. Here is the 1 month with the Fed funds overlaid. You see? So they're raising rates. So it's only natural that yields go up when the Fed raises rates. So nothing to be afraid of, but we do want to see the inversion change. And until that happens, you're going to have people screaming recession. And you can trade it. I mean, you can position yourself for a recession. You can do that by buying out of the money puts or something like that, but do it with a long duration, please. And you would want to do that on your high risers, if you will. Like literally there's 5 stocks that's propping the S&P up, right? And that's tech. Your big tech players, the ones that are just straight going up. That's basically what's propping the market up. So that's the sector you would want to be looking to short. But like I said, if you do it, I would do it not very far out of the money either. Like close to the money puts, but far dated. Like way out. 70, 80 days, something like that. Give the market time to digest the information and then go that direction. But that's literally the only play I see to hedge for an incoming recession. There's still a pretty big gap up here. And gaps do not have to fill, but ultimately, if everything gets back to normal again and the Fed starts to cut rates because inflation did get back to its 2% target, that gap will get filled. It doesn't mean it has to get filled soon. It could be filled later on, like next year, for instance. The same goes for the Bitcoin gap on the CME futures chart. That was our bullish target as long as we were trading above $31,000, right? Because you do have that gap up there. It just does not have to fill anytime soon, and it could be until the next halving before this gap gets filled. We just need demand above 31K. And so far, we haven't really seen that. So far, it's been a lot of supply up there, because every time price gets up around 30K, you see, pretty significant drops. So we definitely want to see it get above 31K, and then we want to see bullish continuation, as that would show us literally that we have that demand. And we do have a breakout on the US 100, which is also known as the NASDAQ. Bitcoin still trading up and away. It has not pulled back yet. I do have it on the other monitor. The dollar, you can see down on the bottom right, is pushing lower, which is what we want to see. Let's get Bitcoin back up here. Put it back on the 5-minute time frame for all of you guys that like to watch the 5-minute chart. And the dollar currently trading under the last daily support. You got another support coming up. A bearish engulfing? Not quite. You did not take out yesterday's high. So you don't really have a bearish engulfing there, but I want to see the dollar break down, and I want to see it close under this low right there. Under 108. 100.8. I want to see it close there, and then I want to see downside continuation. If we get that, then we know that we don't have a trap. We don't want to see it trade down here and then reject and then get back above support, because that could signify that was nothing more than a bear trap. But I love the area that it's rejecting off of. It is rejecting off of monthly support. That's your monthly support. Last month, you broke down, closed under it. This month, you've traded inside of last month's range. That's why I want to see downside continuation, because you are currently trending lower on the month. There's still 21 days left in this month. So absolutely, we could see downside continuation happen on the DXY. You have the news and then the market's reaction to the news. Good morning, Ahmad. Gold. Gold's liking it naturally. If the dollar's going lower, gold should be going higher. Gold just made a fresh all-time high a few days ago and then got a rejection. You can see where the rejection went to, and ultimately it has been bought up. Thank you, baby. So yeah, it does look like gold wants to shoot up and make a fresh all-time high. Oh wait, it didn't make all-time high. I was looking at a chart the other day. I thought it was the gold chart. But it has clearly not made a new all-time high. Well, anyways, I wouldn't be a buyer. Like, this is where you should have been a buyer, on the pullback. We look to buy pullbacks to support. in uptrends, and we look to sell resistance in downtrends. So this is old resistance. Resistance, 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 breakout. Higher push. That's your first pullback to the old resistance. Sometimes resistance acts like support. You got the 21 setting under you. That would have been the bullish entry. That would have been the trade. Even though it was a big downside candle, right? A lot of momentum, but still. Bitcoin going to the moon. Love to see it. Looks good today. Hopefully it gives us a pullback. It will give us a pullback. Even if it's not today, it will give us a pullback. We will have the opportunity to get long on Bitcoin. The debt ceiling, yes, that's another thing that could cause the markets to go crazy. Thank you for bringing that up, AC. Yesterday at 4 o'clock, they had their meeting. As far as I know, because I didn't watch much after 5-ish, the president literally came out with a meeting at the same time the Republicans were talking and said that they didn't make any headway. I guess Biden wants them to take default off the table, but I don't think it's the Republicans putting default on the table. That's just what's going to happen if Biden doesn't do anything, as far as I can tell. So, I mean, I don't really understand what's going on, but yes, absolutely. If the United States of America was the default, that would absolutely cause mayhem for the markets. Just the threat of default can do the same. Yes, for sure. By all means, I'm not saying that it's today's newsprint is going to be bullish for the rest of our lives, right? I'm talking specifically about the near term. The near term, this is good. It looks great. But yeah, you have a lot of things still out there that scream recession. Inverted yield curve, the debt ceiling, the banks are collapsing, high interest rates. A lot of people think that we haven't even seen the damage yet based on the rate of speed at which we have hiked interest rates. That's another thing that's on the table, right? We still haven't seen, there's not been enough time to even see what's going to happen based on that. So there's still a lot of risks out there. But just watch the market. It'll literally tell you. The market is really good at pricing in those risks, right? If it rejects this good news and we fall back into the range and we get back under the daily 21 exponential moving average, then guess what? We start looking to short the marketplace. Yeah, for sure. We got to be careful about traps always. Not just bear traps, bull traps as well. This could literally be a bull trap. Tomorrow we could open, move up higher, take out today's high, and push all the way down and close under today's low. Right? And that would look very bearish if you get a bull engulfing candle, right? And then you get a bearish engulfing candle right after. That's a pretty bearish signal. That alone would probably make me look for shorts. And Bitcoin has not been trading with the US 100. So anybody that is short Bitcoin, if this bullish continuation occurs, be very careful, because we know Bitcoin can reprice quickly to get that correlation back. If you were with me at the beginning of the year, I said I was going to buy Bitcoin. And then I told people that were following me back then that if we get above this swing high, we could literally see Bitcoin reprice all the way back up to the FTX sell-off just to get its risk on correlation back. Because if you remember, this week on the S&P 500 was a very strong move to the upside. Same with tech. Very strong move to the upside, and Bitcoin did the exact opposite. So at that moment in time, Bitcoin lost its correlation with the risk on markets. So literally, I told people, be very careful about shorting Bitcoin, especially if you get above this high. You could see that risk on correlation be priced back into the market. And that's exactly what happened. Boom, boom, boom. In 3 freaking days. What I said happened in 3 days. You got that risk on correlation back. People started shorting based on supply right there, and it's the FTX sell-off. The market did react to that for 4 or 5 days, and then boom, up. So it can get its risk on correlation back quickly. So if you see bullish continuation happen on the NASDAQ, Bitcoin could absolutely reprice in that bullish correlation with the NASDAQ. It's done it before multiple times. So you had that risk down there, right? But as of right now, the near-term structure on Bitcoin is bearish, and it looks bearish, and that's why I had to open shorts when the day started. I want to see Bitcoin get back above this, and I want to see it find support. Ultimately, we will have to find that support, which hopefully will be here. Another area to look for potential support would be the midpoint of today's candle, wherever it closes. So don't buy today's high. Do not be a buyer right now, because like I said, once the New York session opens at 9:30, you can see a big sell-off based on the fact that, like Michelle said, the core is sticky. It didn't move. It's stuck in 4%, 0.4%. So we got to be careful. We got to pick our targets. Pick our targets. We got to be smarter than the people we are trading against. This looks phenomenal right now. It absolutely does. It's a breakout, and I like to see that. Sticky core. Yeah, got that. Don't stand on a rug. Yeah, I hear you. Debt ceiling could cause stable coins serious trouble. Yeah, it could. It could cause the whole market trouble, not just stable coins. Yeah, Bitcoin is a risky asset. There's no doubt about it. I mean, if Tether was to collapse, what do you think is going to happen to Bitcoin? Tether owns more Bitcoin than anybody. Or probably not. I can't say that. I mean, I really don't know who owns the most Bitcoin. I mean, Satoshi Nakamoto does, but I'd say it's between Binance and Tether. So we definitely don't want to see a collapse of either one of those two projects, platforms, applications, whatever you want to call it. You've said before that the first move isn't always the real move. This is true. It isn't. Oftentimes the marketplace will do this just to fool you, right? The dollar's rejecting off resistance. It doesn't necessarily mean that it will stay that way. Like I said, if you get a push lower, even as low as this swing low down here, that would be a big downside move. But if you see if it gets bought up, then all this move was a liquidation run, and then you would be looking for the bullish breakout. Now, this is a pattern. I am bearish on the dollar. I have had a short position on the dollar ever since the highs. All right. So I want the dollar to break down, as it would help my bearish position. I bought the very low of Bitcoin and I sold the very top of the dollar. I bought this wick low as a liquidation run solely against that swing low right there. That was my first long position on Bitcoin. So this was your FTX blow off capitulation. Then on this day right here, when we got under this wick, as soon as price got back above it, I bought it and put my stop under that swing low. So literally, I bought the very, very low tick on Bitcoin. I ended up accidentally fat fingering that position by entering a new long up here at support, which ended up causing my position to go from down here to up there. So unfortunately, it is what it is. But then I bought the June 1st. I mean, January 1st, not June, January. This is January 1st. On a Sunday, I bought daily support right there. That bearish candle's closed. That price, 16,530. When price got down there, I bought it on all three futures platforms on Bitget. So I had entries at 16,550, 16,555, and 16,540. All three I got long on right there. And like I said, I have a short position on the dollar. It's on the USD JPY. As I can't trade this asset, the DXY, I do not have a futures account, so I cannot trade this. But I have a Forex account, so I traded it with the Japanese yen. I just simply got short when the dollar liquidated its previous week's high. And that trade is, well, it's been working out pretty damn good. So obviously I have a bias and I want the dollar to break down and continue lower. However, that's not really helping as long as the Japanese yen sells off, right? I need the Japanese yen to also gain some strength. It's doing it good today, but it's just retesting the 21. So literally, this would be a potential short entry on the Japanese yen, not off of the basic 21 line there, but you would want to wait until you get the daily res test. There's your daily res there. So that would be the short entry. However, this is a bullish engulfing, so you got to be careful. It is bearish, though, because it's trading under the 21 and under the yearly open. But I would love to see it gain its strength back. I'm hoping this push lower was simply to fill this gap. Now I am hoping to see bullish continuation. If I get that and I get a breakdown on the dollar, then that USD JPY short will continue. I'm not sure. What's going on here? But that short position was taken literally on that wick. Boom. It is still open and running, but if it continues to trade sideways like this, I'm going to have to close it. And especially since it's structured bullish now. So we'll see how it plays out. As of right now, I like the direction on both Bitcoin and the dollar. So hopefully it plays out. Don't stand on a rug, sticky core. You said that, got that. Bitcoin getting rejected at the daily 48 EMA. First off, I don't know why you'd be using the daily 41 or 4. Did I delete my damn... Oh my God, I did. Wes, where are you at? Son of a biscuit. I deleted my moving averages, dude. Is Wes even here? I do not see Wes. He has a way of getting it back. Yeah, it is Wes's fault. I mean, I can get it back. I can simply just go get it back this way, but damn it, man. That means I have to change all the freaking colors and everything again, which I literally hate doing. But anyways, let's pull up a 41 or a 48. I don't know why anybody would use a 48. Like, why not just a 50? But maybe there's edge in it. There you go, 48. So let's put it on. It's not getting rejected directly at it. I mean, it's kind of trading above it. There's probably some reason why it's rejecting there. Could be a number of reasons. Usually what I do to see exactly where rejection is coming from, if I don't see it on the bigger time frames, then I'll shrink down to the smaller time frames. And right here, you can see an old 8-hour support. Boom, right there. Support, expansion, breakdown, retest. See? That's all you got to do is drop down in time and you can find what exactly is causing the rejection. But, this looks good. To me, as long as it is trading above this price right here, it's good. All right. It needs to get back above that. That would be better, as that would make this candle green again. But it definitely needs to get back above that. And you can see that weekly open is right there. So you got weekly resistance or support. Then you got weekly what could be resistance. See how on the 8-hour you literally paused at that weekly level, opened above it, traded above it for a little while, and got right back under it. That would have been a decent short position to take, as you had that 8-hour wick to be your risk. But we definitely want to pull back on Bitcoin because we want to be able to buy it. UJ bouncing back hard. What do you mean UJ bouncing back hard? This is a very small range, my friend. No matter what time, you must be looking at the 5-minute. Yeah, this must be what you're looking at. And you must be looking at it like this. I don't know how you're looking at it to think that that's a big bounce back. That's not a big bounce back. You're not even close to retesting any kind of fib level just from the breakdown. All right. You got to get all the way back up to this white line before I would consider it bouncing back hard. And then You definitely got to get above that, right? You would, like, for me to say it's bouncing back hard, you would have to be above all of this. That would be a big bounce back. As of right now, you're just pulling back. You're bouncing, but the direction is lower. So this is a pullback. 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 But we have our level that we're watching. I wouldn't be surprised if people don't start trying to buy there. You can see how that wick traded right to it and rejected at first. I would want to see it pull back down here before I look to get bullish on it. Oh, goodness, goodness, goodness. All right, there we go. So there we go. All right, perfect, beautiful. Got it back. Lovely. And the UJ's bouncing because it's at support. Well, there's support. So naturally, you're going to get a bounce there. Plus, on the daily, it's a 21 exponentials in that zone. So, yeah, people are going to be buying there. Like I said, it's definitely moving in the wrong direction for my trade. I want to see it break down, get back under the yearly open, get under this swing low, and get downside continuation. Over time, we shall see what happens. But I've been sitting in the trade for months, so not really going to worry about it just yet. And I've already taken profits on the trade also, so to be frank, I mean, there's no need to rush. Bitcoin and Ethereum both getting a small bounce. Ethereum trading right up to the daily 21 and slightly rejecting. Bitcoin has the ways to go to get to its daily 21. But this is going to be the weekly open. And today's Wednesday, so that hopefully that means the weekly low is in. And any of these three areas could be potential buying opportunities moving forward, even into next week. As it did try to break out above this descending trend line, the wedge, if you will, right here, but it got rejected. And it got rejected hard. And then broke down below the smaller one. This red line right here is the yearly heat level, or also known as supply. So that's technically what's creating such a fuss on price. It's having very difficult time trading above that price. We did trade above it briefly, but that's also where we started making lower highs. I mean, it could trade inside of this wedge for much longer if this is the wedge that people are taking positions on. But also, if I put that smaller near-term wedge back up on the screen, let's see if that matches with the daily. Yeah. Yep. We'll see what happens, guys. But we got a good print. I think you'll have a pullback, and then you'll continue lower, which is my hopes. Not my hopes, but what I would like it to do. The structure of Ethereum looks completely different than that of Bitcoin. And then there's ETH. So Bitcoin is slowly starting to gain its strength back because ETH is melting versus Bitcoin. My NZDJPY trade did not get triggered. I was looking for it to push lower, take out yesterday's swing low. As you can see, I have a buy limit setting there, but I just did not quite get that. See, there's the news. Look. Ah, so close. So close. There's yesterday's open or today's open. So, I mean, that's today's low before you put in this wick. So I was looking for it to take out yesterday's low, but I put it above it just a little bit because of the spread. You have to account for the spread. It just did not get a fill, man. That's trading, right? Would I have been able to catch it? No, I probably wouldn't have even been able to catch it if I was doing it manually, because I would have expected it to go ahead and push lower. But my directional bias was right. And then here on Aussie yen, I did the same thing. I had my buy limit setting right at yesterday's low. So I was looking for a stab lower, trigger me long. It just did not trigger me. Oh well, you have those days. It's struggling at resistance. So now the shorts will come in. I wouldn't suggest shorting this because it's structured bullish, but the pullback trade didn't work. So I'm going to go ahead and close that position, because now I would definitely want to be watching it before I take the position. I knew I couldn't watch both of the assets at the same time and talk. So I missed those two trades, but that was the trades. That was the setup we were looking for all week. We were looking for longs on Aussie and New Zealand yen. Any thoughts on Aussie dollar? Yeah, I like Aussie dollar to the upside if the dollar continues to break down. Currently, you are rejecting at the yearly opening range, Ahmad. Your yearly open, that is what is causing you to reject. So remember, the DXY is a basket of currencies, right? It's not just, it's the dollar. It's, you've got the euro, the yen, you've got Aussie, you've got the Canadian dollar, all of it. It's just a basket of those. So it will trade compared to what these assets do also. But as long as we get dollar weakness, I like Aussie strength, Aussie versus the dollar, because Aussie is considered a risk on currency. So essentially what I mean by that is if you have the S&P 500, the NASDAQ, the Dow Jones, all three making lower highs and higher highs and higher lows, trending in the up direction back in a bullish market, Aussie and New Zealand tend to outperform other assets, other currencies to the upside, right? Because they're more considered risky. So as far as for a risk on play, I love it. But what I need is a pullback to support. You did get one today, but you're still buying the highs. And as like my Aussie yen position, I was still buying the highs. But I was just looking for a day trade. You've been here long enough, you know how I trade, right? I take profits on the day and then leave a small portion of the position open for any continuation. Is the longer term view still more bearish with lower high put in beginning of May, potential rising wedge, USD JPY? Yeah, the longer term view is still more bearish with me because I'm positioned short in it, but no. Just pull it up and look at the weekly and the 21. I mean, that's your trend. I didn't want to do it there. All right, so here, this is your trend. All right. When we put in this, I thought that this was a bull trap. And when I seen this candle, I was very excited. I was very happy because I assumed that we were going to see lower lows and lower highs as this was the pullback, right? But you're right. It did. It made a higher low, and that's on a weekly closing basis. A higher low. It hasn't quite made a higher high yet. But you can see that you are currently trading above the 21 on a weekly closing basis. So if it does not close back under that, and then this thing needs to start its slope back to the downside to confirm the trend is going back lower. Currently, you're trading above it, and the slope is, well, it's kind of neutral right now, but it is more up. And then here's your 21, or here's your RSI on the weekly. You're trading at the 50. So trading at the 50 on the weekly. The bulls are in charge of the asset. So until we get the breakdown below the 21 and start the trend lower, you have to look at it as it's starting. It's trying to start a bullish trend. Let's say that. These trending indicators will not work in a sideways market. So currently it is sideways. You're trading inside this range. From this candle's low to this candle's low, you're trading inside that. So you are still trading in a range. You're wedging up. There's your range. All right. Here's your operating range. Last month you did close above. And then this would be the bottom end of the range. So this is where you'd be looking to take positions. You'd be a seller up here, a buyer down here. But since you closed above, it wasn't a big close above, but it still was a close above, then that makes this down here potential support for more upside. Or it could be looked at as a bear flag. But I mean, in my opinion, when you've been in the flag pattern longer than your actual flag pole, I don't know if you can actually consider it to be a bear flag. But this is the exact formation of a bear flag. So typically what we would be looking for the bearish position to be still in effect or potentially going to be working out for us would be a close above this trend line. A monthly close under that trend line would suggest that your bear flag is breaking back down. But yeah, longer term, that's all I got for you. Longer term, you're trading in a range, but more structured bullishly than bearish. You're trading above your yearly open. You're trading above the weekly 21. And last month, you did close above monthly resistance. This month is a small range. We're still 21 days left in this month. So there's still quite a bit of time left in this candle. But as of right now, it looks just like a pullback. And like I said, this could ultimately be a buying opportunity. $132,830. If you break down and close under that, then the longer term, downtrend or this downtrend formation would look to be like of continuation. So I'm not exactly sure how you're trying to position yourself in with the trade. Miles Way Jackson. Miles away Jackson. My longer term view is bearish, but the technicals are bullish. Except for, like I said, that monthly bear flag. But remember, when your flag is bigger than your pole, it's not really a bear flag anymore. So this month essentially needs to do something. It either needs to break down or break back up to the upside to make a definitive, yeah, the trend is likely to continue in that direction. So this month will be crucial for determining USDJPY's how we should position in it, essentially. I mean, looking at that, obviously, it looks like an uptrend, right? But new year, new trend. So we will see. Hopefully it breaks down. That's what I want. Yeah. Because, yeah. Anyways, moving on. It's Wes's fault. It sure is. What's up, John? Most traders I see using the 1348 and 200. You were 30 minutes behind my 48 AMA rejection comment. It has moved above since then. Got you. Yeah, I am definitely going to be way behind the comments. Apologies on that. UJ bouncing back hard. Hit the like on the comments today. Yeah, it is what it is, though. I appreciate anybody that does like the videos. Obviously, it helps with the channel, but it is what it is. Tesla TA, please. Let's go look at it. We do have the market open. It is 9:39, so the market's been open for 9 minutes. We did kind of get a pullback, but we'll see if the market rejects or what happens. All right, let's get the risk back up there, as I do want to watch this thing closely. I want to see how today closes on this, and we'll look at Tesla down here. That is not a ticker. Got you. So pre-market, Tesla had a nice pop to the upside. All right, so we still haven't filled the gap on Tesla. Near term, it looks like it's trying to struggle. It is still above the yearly opening range, so you're still bullish according to that metric. Yeah, I want to keep that up there. You were pulling back, but structurally you're under the 21. So it's probably going to be a selling opportunity until you start closing above the 21. Resistance will probably be roughly 179.70. There is a big gap down there, but that gap doesn't have to fill. This right here, right there. You did trade into the gap, but you did not fill the gap. So right now it's a little bit difficult. I would say more than, I mean, the trend looks like it's down, but this could just be a bullish pullback. So any pullback into this region here, I would want to see it hold price. I would not want to see any dailies close under this price, 164.31. Otherwise, you're probably going down to fill that gap. As long as price is trading above that, yeah, you could potentially look for bullish opportunities. You're pulling back right at Monday's open. I mean, you gapped up, hit Monday's open, and that's where you're pulling back from. And the US 100 pulling back down to daily resistance. I do not want to see it close under that today. This is considered demand, even though it's the highs. I wouldn't be a buyer up here. I never try to buy the highs unless I'm looking just for a day trade. So we'll watch this, see how it closes today. This is a pretty good pullback, and if it's going to continue to be bullish for the rest of the day, I would assume this is where they will start to buy it. Currently, no volume in here, so but I've seen it pull back on no volume before. There's your volume by time. Always you get the most volume at the market open for the first 15 to 20 minutes. Bitcoin's still trading up, not really pulling back yet. Dollar retracing. to the midpoint of the candle. We don't want to see the dollar start closing hourlies above these three lines. EJ bouncing back, read that, hit the like, read that, Tesla read that. US 2000 trend line broken. Why rejection? Take a look, please. I've never heard of the US 2000. The Russell. Here's the rut. But you said the US 2000, so I'll FXCM, Forex.com. The reason the Russell's been struggling is because of the banks. All right, the banks and healthcare, I think. The healthcare is trading up. Mainly the banks, right? That's what's causing the US 2000 or the Russell to stay trading under its yearly opening range. So yeah, we would love to see the mid caps start to be bought up. But the Russell usually lags the other markets anyways. You're trading into resistance. Could you short it? Yeah, ultimately, if you get back under this, which you are currently, you could short it and use today's high as your stop. That's not, trading advice. It's just if I were to take a short position on it, that's how I would play it. It's trading kind of far away from the 21 on the weekly, so you could get a higher stab. You could literally trade up to here before you rolled back over if the trend is going to continue down. If the banking stocks start to go higher, then this will likely go higher too. This is going to be considered value. But like I said, as long as your banks are struggling, the trend is sideways. Right? You've been trading sideways. This is a big range here. And you're not trading at the top of the range. On the monthly, it doesn't look like a range at all. On the monthly, it looks like a trend. But there's monthly support. So that's why you're creating that range. So this would be the top of the range. That would be the top. This would be the bottom, but you broke down. Right now, you're kind of in the middle of the range. I don't think I would take a position on it either way. I don't like the setup myself. Right? That's just me. But if you just got to trade because you have to, then if you get a pullback up to 1767, I would want to see it reject there and start to roll back over on the smaller time frames, obviously. Right? If it does get a pullback there and start to reject there, you could look for entries there and you could use that swing high as your risk. Ultimately, targeting the bottom of the range would give you like a 1.5 to 1 risk to reward. Thanks for the additional clarity. Already positioned in a decent short. Entered a few more shorts on that May 2nd high. Hoping for a breakdown. Also, appreciate all the value to bring. My man, you are welcome, my friend. Market's falling hard. First move may have been fake out move, or it's filling the gap this morning and then go higher. Yeah, ultimately, it's going to be, we got a long day of trading ahead of us, right? You got all day. Literally, the 9:30 is the start of the market. I usually end the sessions around this time because basically my trading day is usually over around 11. I don't look for any more new entries, but a lot of people do. But yeah, ultimately, it's going to matter how the day closes. That's what's going to be important here. More important than anything, in my opinion. Because, like you said, if you do reject from that bullish move, completely and utterly fail on the daily and close bearish, for instance, that would look very bad. That would look like the market is literally just did a stop run and it's heading lower. I wouldn't take a short based on that, right? Because as of right now, you have a bullish engulfing. In fact, before I would get short on this asset, I would need tomorrow to close as a bearish engulfing. So that would be Thursday. Friday, I would look for entries. Friday into next Monday, I would look for bearish entries. Sometimes you got to give the setups a couple days to work out, right? You can't just occasionally it'll work beautifully on that first day, but most of the time it's best to let the setup play itself out. If you have basically a bias, you want to see a little bit of, you want to see the candles perform in the direction of your bias, essentially. Like, you don't never want to take a short at the high just because it's the high. Because if you're in an uptrending market, you're going to make a new high, usually. Can you have a look at ASML on the weekly? It looks okay. The buying opportunity already occurred. If I was trading this asset, I would have looked to have been a buyer there on this candle. Even though it traded through, I would still be looking on the daily time frame for that entry. You can see you did not quite get there on this day, but your second day, the next day, closed above it. So I would have taken the bullish entry right at the market close and then just used that swing low as my risk. But now, that trade is already in effect. It's already playing out. So you don't want to necessarily buy it now, especially now because you're trading at the very top of the weekly range. And you just broke out from last week's range. So this could be the area where it pulls back. So if you're looking for further bullish continuation, you need to wait, I would say, for a retest of that price. And then you would want to see it hold 634.47. You're also coming into an area of potential supply. So I wouldn't get long here. I would wait until next week or perhaps the week after. If you don't get a retest of this and you continue to hold support at this price, 649.98, then you could also look for bullish entries, but your risk is going to be difficult to manage. Either way, you're still going to have to give this thing a few days. Because like I said, you're trading right into resistance or what could be resistance. You want to buy the weekly low or the week, you know what I mean? You don't want to buy the weekly high, and you're making a fresh weekly high. So like I said, your entry would have been down in that area 3 weeks ago. So the next higher high or higher low you would want to see be in this area. And there is somewhat of a trend. I mean, obviously they would have had it situated like that, but I would situate it like that. Now, trend lines are very subjective. That's why I use these lines. They're objective. So wait for 634 to be verified as support. Then you can look for long entries, and then you'd be targeting the top end of the range. Markets pulled back due to UAE Royal Group saying they are short U.S. stocks. Immediately, markets pulled back. Got you, Ray. Thank you, Johan, for the thumbs up. US 30. And then we'll wrap it up. So, been struggling to try to get below the yearly opening range. These are old levels. Let's get rid of them. Struggling to maintain that. But if it can, that would be good news. So currently you're pushing down, but you're trading inside of a very big weekly range. Last week's range was huge. This week's range is tiny. But I mean, yeah, there's two things I would have to do for this. I would have to wait for price to get back above 33,661, or I would wait to see how price reacts around 33,336, which is your yearly open. It's already been tested twice. This was a deeper test. So if this trend is going to continue, you might get an even deeper test. But then again, it could also be a reversal, right? So watch last week's close and your yearly open. See how price reacts around those two levels before you look for bullish opportunities. It's trading sideways, but you're above the 21 and you're above the 50. So since you're trading above the 50, it looks like a test of the 50 on the RSI would be concurrent with the test of the yearly open. See if that happens. If that happens and you start to get a pullback off of it, yeah, I'd say you could probably see a continuation higher. But this is different than US stocks. So this is, well, no, it ain't. It's the Dow Jones. Sorry. It's been struggling, right? It's been struggling. We've already made a fresh yearly high, then another fresh yearly low. We had a yearly low. It's struggling. The Dow, Disney is a Dow component. So Disney has earnings coming up later this week. Disney's a big Dow component. So maybe when you get the earnings, when is the earnings for Disney? Today. So this evening you will get Disney earnings. So that might give you the volatility needed to push the Dow lower. All right. These two prices are what I'd be watching. This to me, because of since it took out the high and then it went down and took out the low, one could almost, if you think you're going to see more bullishness today, one could almost take a bullish entry right now and use today's low as your stop loss. Obviously, you'd be targeting today's high. But, I mean, I don't like setups like that. because I mean, it's no matter, this is already engulfed. It's already traded outside of yesterday's range. So whatever color it closes will be it'll either be bullish or bearish. It'll be an engulfing, but that's on a down move. But like I said, since last month, you've been just taking liquidity out both left and right. So, yeah, Disney's Disney's earnings might be the volatility needed for this thing. To get ahead of Disney's earnings, you would almost have to position yourself. I don't know. I would give it time. I don't really like it. I mean, on the daily, yeah, it's like right there. You know what I mean? It's right there. Like it could literally go either direction. All right. So keep that in mind. But you've already taken out yesterday's low, right? You've already taken out the previous 2, 3 days high. So you've already liquidated everything. So now the real move will probably occur. Up, then straight down. So yeah, it's difficult, right? It's a difficult trade to take. It looks bearish looking at the 5-minute. Looking at the daily, it's sideways. So it's difficult. Really difficult. So unfortunately I can't help you with it. All right. You guys have a fantastic rest of your day. I will see you. Well, tomorrow is Thursday, so I'll see you tomorrow again. We'll be doing another live stream. We also have the PCE, so that could also help the markets be bullish if we get a good reading on that. So we'll see you tomorrow morning. Thank you guys so much for your time. Thank you for being here. Make sure you show back up again tomorrow morning and we'll go over it. And hopefully tomorrow morning we'll have a trade set up, as we did not get one today just yet. So thank you guys once again. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.